Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Tuesday, October 20th, 2009. Let's start with the euro-dollar pair, which fell today in New York trading after moving mainly sideways most of the overnight session around the 1.50 level. The greenback strengthened as U.S. stocks sagged on some weak housing data, which sapped risk appetite. The greenback also benefited from an earlier Bank of Canada decision to leave key interest rates at current levels and was a rather dovish announcement. The pair retraced about 61.8% of its rally from yesterday's low to today's high, found support near 1.4880, and then started a new rally in the New York afternoon trading. The euro has also stalled against the yen, entering a period of consolidation following a strong rally in the second half of last week. This can be just a pause before the euro extends its gains, but the strength of the euro, especially against the dollar, can be troublesome for the Eurozone economy as it makes European exports more expensive. The Bank of Canada kept its benchmark overnight rate at 0.25% for a fifth consecutive time and reaffirmed its commitment to keep it at that level until the middle of next year. The bank said that the economic recovery is underway in Canada, supported by monetary and fiscal stimulus, increased household wealth, higher commodity prices, and stronger business and consumer confidence. However, the strong Canadian dollar is pressuring the economy in the other direction, working to slow growth and keep inflation pressures down. Therefore, the announcement was a bit more bearish about the economy and more dovish in regards to interest rates. The reaction was strong in currency markets to the announcement, with the US dollar-Canadian dollar pair surging in a couple of hours following the Bank of Canada statement. From a low near 1.0265 overnight, the pair surged above 1.05 and held those gains in afternoon New York trading. As we mentioned, the sharp move in this pair, along with weaker stocks, helped the greenback gain against its other rivals. The pound-dollar pair fell from its New York morning high of 1.6485, retracing 61.8% of the pair's two-session upswing. Following a strong surge last week, it seems that the pound's rise will move at a more gradual pace, especially as the pair runs against the key level of resistance in the 1.65 area. Weak U.S. stocks and the increased sense of risk aversion today was fueled by weaker U.S. housing data. Housing starts surprised forecasts on the downside in September, with the annual pace rising 0.5% to 590,000 from a downwardly revised 587,000 in August. The data is an indication that builders expect to see weaker demand as a result of the expiration of the government's $8,000 tax credit for first-time homebuyers, which expires on November 30th. The data would adds a piece of evidence for Fed policymakers that would make them more inclined to keep interest rates low for an extended period. U.S. producer prices, meanwhile, fell 0.6% in September, a figure that also undershot forecasts and one that implies that inflation remains subdued and not a major concern for Fed policymakers. The annual rate fell by 4.8%, a deterioration compared to August. Core prices, which exclude food and fuel, were down 0.1% on the month, while the annual rate fell below 2%. The weak core rates will keep the Fed on the sidelines in terms of raising interest rates anytime soon. Tonight and tomorrow, the fundamental docket is rather light. Tonight, Australia releases its WMI leading index. Overnight, the UK posts its meeting minutes and the CBI measure of industrial orders, while tomorrow the US will reveal its Fed Beige Book. And that concludes today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.